Bitcoin's on-chain data is revealing a massive power shift. Large investors are piling in, smaller investors are selling off, and the demand for Bitcoin is slowing just when it needs to accelerate. In this video, I'm going to unpack what this means for Bitcoin's price, why the sell pressure might finally be easing, and whether we're on the edge of another rally. Let's get into it. Alright, let's dig into Bitcoin's on-chain data, because there's been some fascinating activity lately, especially from larger investors. When we look at the total whale holdings monthly change chart, it's clear that demand growth among big players surged just before President Trump's inauguration. To give you some numbers, the monthly growth rate of Bitcoin holdings for these large investors jumped from a negative 0.25% on January 14th to a solid positive 2% by January 17th. That's a remarkable turnaround and the highest monthly growth rate we've seen since mid-December. This sharp increase in accumulation behavior highlights just how influential these big holders, often called whales, are when it comes to driving both Bitcoin's demand and its price movements. Keeping an eye on their actions is crucial for understanding where the market might be headed next. Now, taking a closer look at the data, further on-chain metrics reveal that the recent increase in holdings by large investors has been a significant driving force behind Bitcoin's recent price gains. Interestingly, while these larger investors have been accumulating, smaller investors have been heading in the opposite direction, offloading some of their Bitcoin. Let me break it down with some numbers. Large investors, represented by the pink line in the chart, have increased their holdings from 16.2 million Bitcoin on November 4th to 16.4 million today, marking a notable rise. In contrast, small investors, tracked by the purple line, have reduced their holdings during the same period, dropping from 1.75 million Bitcoin to 1.69 million. This divergence in behavior between the two groups highlights a key dynamic in the current market trends. Another key point worth noting is that Bitcoin's sell pressure has dropped significantly over the past few weeks. During the December rally, when Bitcoin was pushing close to the 100K level, a large number of holders chose to lock in their gains. At the peak of this profit-taking activity, daily realized profits soared to an impressive $10 billion. Now, moving into January, those profits have dropped substantially, hovering at around $2 to $3 billion per day. So, what can we take from this? It suggests that most of the heavy selling may already be behind us. With less profit-taking pressure, the market appears to be entering a calmer phase, which could help it stabilize and set the stage for the next upward move in Bitcoin's price trajectory. In fact, when we take a closer look at the traders' unrealized profit margins, it becomes clear that they've fallen to levels typically associated with a price floor. The traders' on-chain realized profit margin dropped almost to zero by mid-January, marking a sharp shift from the elevated levels seen in November and December. Back then, the metric was hovering around an overheated 60% as Bitcoin surged toward the 100K mark. Historically, when profit margins drop this low, it indicates that traders have less incentive to sell, as the potential gains from cashing out are minimal. This reduction in selling pressure could signal a turning point for Bitcoin, suggesting that the market is edging closer to stabilization and possibly setting the stage for the next move upward. Now, while selling pressure has eased, overall spot demand for Bitcoin has slowed down quite a bit. For prices to rally again and rally sustainably, we're going to need to see demand pick back up. Right now, Bitcoin's apparent demand is still in expansion territory. That's the green area on the chart. But the rate of that expansion has dropped significantly. Back in early December, Bitcoin demand was growing at 279,000 BTC. Today, that's down to just 75,000 BTC. And if we look at demand momentum growth, we can see it's taken a significant hit, dropping from 1.7 million Bitcoin to just 100,000 in the same period. This sharp decline in momentum suggests that the buying pressure has slowed down considerably. For Bitcoin's price to rally again in a meaningful way, we really need to see that demand growth pick up. Without a rebound in momentum, it's going to be tough for prices to gain any serious traction. Finally, let's gain a bit of perspective and take a quick look at Ethereum, which has been struggling to keep up with Bitcoin. Since the end of 2023, Ethereum has underperformed significantly, with its price falling 43% against Bitcoin. So, what's behind this underperformance? One of the key reasons is that Ethereum has turned inflationary again. Its total supply has increased by 500,000 since April 2024. While that might not seem like a massive jump, it's a big deal because Ethereum was expected to become deflationary following the merge upgrade back in September 2022. Instead, Ethereum's supply has now returned to pre-merge levels, which undermines one of the major selling points of the upgrade and raises concerns about its long-term tokenomics. To wrap things up, here's a summary of what we've learned. First, large investors are currently driving the market, steadily accumulating Bitcoin, while smaller investors seem to be offloading their holdings. This shift in behavior has played a major role in shaping recent price movements. Second, the sell pressure has eased significantly, with realized profits and trader margins now near zero. This is an important indicator as it could suggest that a price floor is forming, meaning the selling may be mostly behind us. Lastly, while demand is still growing, that growth has slowed considerably. For the next rally to take off, we'll need to see that demand pick back up and regain momentum. Without a sustained increase in buying activity, the market could struggle to break through key resistance levels. And that's all for today's analysis. Thanks for tuning in, and I'll see you in the next one.